All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, a down week here on Wall Street. And in the 4 days since the CPI gap, we've negated just about 6 weeks worth of trading here. You see, we gapped up last month on the CPI number. Market got super euphoric, especially on the Powell move a few weeks ago. But we really were just kind of stuck in this range here, and market was trying to consolidate bullish. If we take a look on the weekly, we had an up move, and we just trying to get sideways action here, trying to bull flag a little bit, and we've gotten rejected pretty hard. Take a look at that 50 moving average there. We rallied up right into that on the weekly, and I mean a clear-cut rejection, knifing right through that 20-week moving average, and really closing at the lows of the week when it was all said and done. Taking a look here at the markets, you can see here when we gapped up in that 405 area, whenever you gap up, so we've had this long trend line here going back to basically a year now, going back to the previous all-time high. And obviously that's been a point of interest. We've been talking about that a lot lately. And whenever you gap above that, usually that's kind of like, the free pass. Like whenever you gap above a major level, usually you should be able to continue higher and break out. And, on a retrace here during the day, we really should have seen buyers step in at 405. So here's your gap up. This is an hourly candle, and their buyers just were nowhere to be found. We went down, we back tested it the next day, and it was just straight down ever since then. Post FOMC, just gap down, gap down, gap down, closing the week below the 50 moving average on the daily time frame, and basically getting close to this 380 level here, which was the pivot high previous to last November's FOMC. We warned you guys about this last week. We talked about banks. Let's take a look at the KRE here. We'll talk about banks a little bit later, but take a look at the KRE. This is within 52% of fresh 52-week lows. And we talked about this breakdown last week. The XLF. Take a look at Bank of America. This thing just getting roasted last week and really the week before with no news. And like I said last week, this is, I've been doing this long enough to know when the banks just sell off without any sort of news or anything like that, especially in a bear market, there's usually problems lying up ahead. So market's coming under lots of pressure this week. Let's look at the triple Qs here. So this channel that we've been following, this is what I would call an impulsive breakdown. So we rallied up off the lows, and we've been in this channel since really October. And you can see here, we came up here, tagged a line, came down, put in a higher low, we came up, put in a higher high, then we pulled back and started to flag. We put in a higher high after the Powell comments from 2 weeks ago, right? So we took this high out, but we never got back to this trend line. Then on the CPI, we gapped up, put in another higher high, but we never got back to the trend line. So that tells you that momentum is declining. And once the gap up couldn't be held, it just blew the bottom right out of it. You can see that weekly or that daily inside bar that we were talking about last week, how the triple Qs managed to hold that. And it was the only index that held it really last week. That broke, and then this bottom trend line broke on a weekly closing basis. So there is problems here in this market. Speaking of tech, let's look at Apple. I want to show you this weekly pattern here. First of all, you can see this low here. This was actually the November CPI gap on a weekly chart. You can see we closed below that low on a weekly basis. So that's a failed inside bar. So we have an up move, right? And then bullish consolidation inside of the green bar. And now we've closed below the low. That's a failure. In addition, take a look at this trend line going back all the way 2 years ago to November 2020. That has held up the entire time. And we got a weekly close below that today with today's sell-off with good volume behind it. So leaders in tech getting hit here. Take a look at Tesla. Fresh 52-week lows for Tesla, closing just above the 150 handle. And this thing just can't get out of its own way. It did come out that Elon was selling again. I did suspect that the other day as this was selling off. Even while the market was having green days, Tesla just couldn't get out of its own way. So Elon was dumping a little bit more. And really ever since it broke this trend line Big head and shoulder pattern here going back to really March of 2021. Ever since it broke that, it just has not been able to get anything going. Now, I think it's probably, I mean, you're into this nice little area of support right here where you broke out in 2020. This should get a bounce. It's a little oversold here. So this is one of the names that might get a little bit of a bid. We're also seeing possibly in some of these big tech names like Tesla, some tax loss selling, typically Amazon, basically at the lows here. Microsoft's held up, but got rejected at that 200 moving average. Google back near the lows now with this week's close. So we may see some of this is maybe a little bit of tax loss selling going to the end of the year. And some of these may get a little bit of a bid in January as you kind of get that relief. They call it the January effect. But either way you slice it, this market is in serious trouble here. And again, that's why I've maintained the last several weeks, again, this is just a bear market rally, and this is how they behave. You get these big up moves, big surges. We were up 6% on the NASDAQ this day, almost, I think, 7% last November. But then you get these big down moves where the bears come in unannounced and uninvited, and they come in hard. So, again, be very careful in this market. We are not out of the woods by any shot. Let's look at the Russell 2000. Again, this is another thing that we warned about last week. The Russell 2000 showing weakness to the downside. Again, not making higher highs with the market. And Russell 2000 is a leading indicator, right? It's a risk index. It's small caps. So if money is flowing out of that, money is looking, it's positioning in a risk off manner. We also closed below that Powell pump day from 2 weeks ago last week. So that was an indicator that there was some laggardship coming here for the market, and some downside possibly. The Russell should have bounced off of this gap yesterday, doing this video at Friday night, and we gapped below that today. And, we did manage to close just above the low of that candle today. But, I mean, this should have bounced and been green today. So very, very weak here. I'm hearing lots of chatter that some quants, and if we look at the futures here, there was quant funds that had to, ever since we broke this low here at 39.30, they had to flip short essentially, just according to risk parameters. So I think I had it penciled in that we were going to bounce today in the broad markets, but that did not happen, and I think that has a lot to do with it. Also, we did have quad witching OPEX today, so there is some game playing and stuff that goes on there as well. So, but either way you slice or dice it, they do not do this stuff by mistake. It's not a mistake that they closed us just below that 50 moving average. And the market in really rough shape here. Let's look at the diamond as well. This is just getting a bounce off this trend line going back to all-time highs. But again, the Dow wiped out, just like everything else, wiped out basically a little over a month worth of gains in 4 days here. And that's with a gap up. So market's very weak here. And I would tread very carefully moving forward. Semiconductors via the SMH, believe it or not, still holding up better than everything else, but still finally negated that inside bar, that green bar that I was talking about for the last 2 weeks. We did finally close below that on a weekly basis. So semiconductors now have a failed inside bar on their hands. Next area of support is going to be right down here around 200. But again, lots of weakness here. And take a look at NVIDIA, by the way. Which is a big semiconductor and actually makes up the largest weighting in the SMH. But 50 moving average, we traded right up into that. And NVIDIA was up about 80% since October. Just think about that. That's an amazing move here. And pretty good clear rejection there on the 50 moving average. So semiconductors may be looking to back off here next week. But we'll see what we get here. Markets are getting a little oversold short term. So, I can't say we can't bounce. I mean, nothing goes down in a straight line. So anyways, IGV, believe it or not, actually holding up a little bit better as well. It did close back below that 50 moving average, but you did manage to hold that pivot from last week. So we did not close below last week's lows. And you still have kind of, you have an up move here. So you still have a bullish inside bar, although you did try to get above the 20 moving average this week and got rejected. So still near term, this still could move higher. The problem is that's kind of the micro pattern, right? The small pattern. The big pattern is down move, and then you're trading sideways to up, which is bearish. So you could get a near term move up, but the bigger picture pressure is pushing to the downside here in cloud software. So just be aware of that moving forward. Dow transports here, again, still holding up okay. Again, not a terrible look here, but we talked about this last week as well. 1, 2, 3 lower highs in the transports versus 1, 2, 3 higher highs in the spiders. So the transports were not confirming the highs with the market. We noted that as a leading indicator of weakness, and obviously we're seeing markets sell off here. Dow Transports did hold the 50-day moving average, as well as this lower yellow trend line here. So they're holding up okay. One area that did not perform well this week was the jets. Airliners got roasted. Again, gapping up on Tuesday with the CPI, like everything else, and then wiping out pretty much all of the November gains. Again, in 4 days here, it did close below all 4 major moving averages there. So airliners definitely showing weakness to the downside. Interest rates. So 10-year really kind of weak, not weak, but uneventful price action this week, by and large sideways, and it was sideways mostly last week as well. I am getting kind of interested in this trend line though, so that goes back to March of this year, so about 7 or 8 months or 10 months ago now. But yeah, right in the middle of that, so you got the hit right there in August, and we're basically getting to that area now. If we consolidate too much above that, it could make this trend line a little bit more minor, but I am watching it right now. And I didn't see rates do anything too crazy this week. The 30-year, I still have a buy signal on this, believe it or not, on the yield. But again, this is very kind of just choppy price action this week. It didn't look like interest rates really put a lot of pressure on the market. And with the market selling off based off of Powell's comments, it was like Powell was more hawkish, but we didn't see rates really explode. So bond market may be starting to kind of call the Fed's bluff just a little bit, just something to keep an eye on here. But, rates held up, so we'll just leave it at that. There was no serious move in either direction. The 2-year did get a decent bid on Friday, and it's actually putting in a bullish pattern here. So an up move, inside, up move, another inside move. And again, you could still get that inverse head and shoulder rather, target to play out. So here's your head to neckline. Just add that there. So right up in that, just above the 100 moving average a little bit. And you might even get up to the 104 area, which would be testing the pivot lows from June. So 2-year actually holding up okay, and it's still doing some backing and filling. I don't see any issues right now. High yield debt, though. I haven't talked about this in a while. High yield debt has moved off the lows with everything else. HYG here, getting rejected at that 200 moving average like a lot of other things, and now still back inside of this channel. Take a look at the weekly. This is still bearish chop, so down move, sideways to up price action. Take a look at JNK. It's a pretty good bear pennant there. You tried to get above that this week on the CPI number, and you closed back inside of that. So a rejection there for high yield debt. We'll definitely need to keep an eye on that moving forward. Anyways, over to home builders, XHB and ITB still holding up really well. In fact, ITB was actually green, up over 1% on Thursday. So pretty impressive that the home builders are holding up so well. The only thing I can think of right now is that you've seen rates kind of back off. So we just looked at the 30-year, and really since late October, they've backed off. And I could see maybe that home builders just getting a little bit of a bid based off of that. The thing is, there's lots of problems out here. There's delinquencies. I talked about that last week. Rates are high enough that it's doing damage, even if they're not coming back, or even if rates aren't continuing to go up, they're still doing damage here. So I think the home builders will be a short here at some point in the future. They're holding up really well right now. It's not my job to question it, but I do think this will be a sector that has a lot of meat on the bone to the downside in 2023, if you ask me. But for right now, they're outperforming, and we'll respect that for the time being. VNQ, so real estate here, general real estate equities, still has this green bar intact. So the low of this was 83.95. We closed at 84.09 Friday, so they did save it at the last minute. I don't think it really matters much. I mean, I would be absolutely floored if it got up to this inverse head and shoulders price target. At this point, it's just so weak, and it's had a long time to break out, and it hasn't been able to do anything. But then again, the market has been under pressure. Either way, it's hanging in there. We'll just leave it at that for now. Over to XLF. Again, continuing kind of my discussion from last week, banks are something stinks with the banks right now. We, again, just like the Russell, we should have bounced off of this gap. That was an important gap. That was the November CPI number. And we got an intraday bounce on Thursday, and then we gapped lower today. And again, we didn't even close. See, the low is 33.80. So we didn't even reclaim the low of this candle by the close today. So very weak, action in banks. Take a look at Goldman. pretty good sell-off. I was telling people, full disclosure, I am short Goldman, but I was telling people for a while, this is just a short squeeze and it's going straight up, not making any supports. On the way up, it's going to go down just as fast as it went up. Take a look here. You close below that inside bar low on a weekly basis. So Goldman in pretty weak shape here. We looked at Bank of America earlier. Take a look at, Wells Fargo, KBE, large banks, regional banks, KRE, and of course the everybody's favorite Credit Suisse here. These are not good charts. These are not charts of strength, and these are not types of things that you would see in a bull market. And that's the reason why I said we would not likely see anything like a Santa rally this year around. Anyways, lastly, broker dealers here, XBD. Again, pretty good breakdown here. Lost that 460 level. This should have good support around 440, but ultimately it wants to go back to 420 and then back to 400. But for right now, it's hanging in there at that 440 pivot. On to energy. So let's take a look at crude. So crude hanging in there okay. It did get a nice little bounce off that 70 handle this week. And they did announce that the Biden administration is going to start refilling the SPR, which is, I'm sure you guys have your opinions about that. But anyway, we came up here and touched the 20 moving average intra-week, and then we kind of backed off a little bit. We actually, it was actually almost a bit of a sell to news. So here's the spike when that news came out, and then we sold off a little bit. Maybe some of it is OPEX related. In fact, for a lot of it probably is. But a lot of times when you get these big news events, sometimes you will get a sell to news. If that does happen, I think crude has a lot of support in the mid to upper 60s. So if you can get down there in a straight line, I would probably be a buyer of crude. And what's kind of baffling is there's still a lot of shorts in crude here. This chart's from last week here, and it's Brent, but still, there's a lot of shorts in Exxon and XLE as well. And you're looking at basically the net longs going back to September of 2020, we're basically at parity with that. And that's with crude, basically at the lows. Now, if that's at the highs and you see something like that, then I don't really care. But when it's at the lows, that tells me the boat is getting loaded to one side. That tells me everybody is shorting crude, betting on a recession. So that to me increases the odds of a counter trend move. So just something to keep in mind here. But again, crude holding up for the most part on the week. We'll see what it does next week. XLE continued to back off, but actually didn't take out last week's lows. Again, much like everything else, like the spiders did. So energy stocks still holding up really well. XOP there you see, OIH as well. I still think these are in correction mode. I'm still looking for 260, 250 on OIH. I think that's a really good buy level, depending on how we get down there. But overall, they're still holding up really well, and this has still been a very strong sector this year. Over to, I'll just briefly touch on uranium here. So CCJ and URNM, I'm not a fan of these weekly patterns. I do think they are in corrective mode still. So again, we had the down move, and then we stayed inside of this red bar. So that is technically bearish consolidation. And now we're kind of starting to curl down just a little bit. You see it there as well on CCJ, although CCJ managed to close up 1 penny on the week. So, hey, it was green in a down market. So I'll give it that. But that still has a pretty good ugly sell-off bar there from about a month or two ago that is now kind of rolling over here. You see the same thing kind of on Sprott here, SRUF. But again, I believe last week I told you 18 and I think 15, I want to say 1575. We'll call it 1575 are going to be really good buy levels here on CCJ moving forward if we get down there. Nat gas all over the map as it tends to be. So if we look at the daily here, cap up, sell off, 10% up the next day, 10% down the next day, 10% up. And then we kind of had a little bit of a micro kind of hammer candle. I wouldn't say a micro hammer. It was closed up basically halfway between the lows and the highs. But nat gas all over the map here. You could make a case that, this is an up move and now it's trying to flag, but this is just too volatile for me. It needs to tighten up before I call it any sort of bullish move here. I would have liked it a lot better if we had gotten down to $5. And kind of like double bottom or higher low there into that trend line. But either way, nat gas holding up really well, and I can't say anything bad about it. I just wouldn't do anything with it personally at the moment because it's just too all over the map. Dollar index, DXY here. So I told you guys for a while, 104 would be a good area. And it's holding that for now. I don't think this is the major low. I do think it has one more leg down. But dollar getting defended this week. Again, it's OPEX, so maybe they bounced it up for that. But overall, yeah, it's holding the 104 area right now, but I do not think that is the final low. Gold, again, holding up okay. And again, the dollar was green Friday, so was gold. Usually that's kind of a good sign, but again, it's one day. So, and it's also a quad witch OPEX. So I guarantee you something has to do with that. But gold held up nicely this week. You can see we had an up move. We're going sideways. That is bullish. So a little bit more backing and filling. Remember, look what you're going into. So, you went down here in May, the middle of May, and then it took till, we'll say the middle of July to break down. And we've only been consolidating for a couple of weeks. So we need to do a little bit more, but gold can move higher if we can do that. Before I get onto silver, GDX here is actually holding up really well. And this was also green in a down tape on Friday. So that is showing relative strength as well. Silver continued higher in the beginning part of the week, which was very surprising to me. Had a pretty good sell-off Thursday, and then the dip was bought here before it even got to the 20 moving average on Friday. We'll see what happens after OPEX. Maybe some of this unwinds. This is still into a lot of resistance, though. I'm telling you guys, do not chase this up here. Wait for a pullback or a correction. It will give you one. So take a look here. This is where you had an up move. You had what? Bullish inside bar, and then it broke down. That means there's longs trapped in there. When we get up to that price, they will turn into sellers. So do not chase silver up here. Just like I told you guys, don't chase XLE up at the highs. I promise you'll get a chance to buy this. I will be buying it myself, but just be aware of that. This needs to do a lot more backing and filling to get through that area, but it's holding up really well, and I like silver a lot for 2023. Platinum. Hanging in there well, still kind of just stuck in this wedge pattern. We'll see if we can get to this lower trend line. I like it down there if it can get to that area. Maybe even a fake break of this smaller wedge here. So we'll see what platinum does, but it's holding up well and still wedging here. Ultimately, this will get to 1200. And then lastly, let's just do Bitcoin really fast, although it didn't do a whole lot this week. Remember, we talked about that micro kind of bullish inside bar, so up move, and then we had another smaller one that it was inside of. And I said it could probably get through the 50 moving average, and I don't know if it gets much past that. And that's pretty much exactly what happened. We put in the highs around 18,378. And then with everything else, it rolled right down. And that's why, again, kind of like the IGV, when I said earlier, micro pattern, you have a bullish inside bar. So it could move up in the short term, but then macro, big inside bar. Take a look at this weekly pattern. That is a ugly weekly inside bar, and we've had a lot of them over the last year or so on Bitcoin, so be careful with crypto here. Anyways, to wrap up, let's just go over the levels here really quick. Spiders got through this 50 moving average. Ultimately, there's a little bit of support here. We could still bounce, but I now expect, 390, 392 to be resistance. Remember, I talked about 390 for a long time. I said, if this breaks, it's going to open the floodgates. This should turn into resistance now. A bigger bounce level is right down here at this full gap fill around 375. If you were to get there in a straight line, the market would have a pretty good rally off of that, probably even into the year end if we got there by Monday or Tuesday. But I do now expect 390, 392 to be resistance. If you guys follow the futures via the ES, the big resistance level is going to be right here, right at this green bar low. So right around 30, we'll call it 30.35, 30.40. That's going to be your big level there on the upside. Anyways, guys, going to wrap it up here. You guys have a great weekend. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll talk to you guys all next week.